Hello, and welcome to our latest video blog concerning the changes that were made to the flat rate scheme for VAT during 2016. Commentators believe that 2016 could have sounded the death knell of the flat rate scheme. In this blog, we will look at those changes and how they may affect you. In order to understand what the flat rate scheme for VAT is, we will start by looking at what was in place beforehand. Prior to 2002, all VAT registered traders calculated the amount of VAT that they needed to pay as being the difference between the VAT charged by the business to its customers and the VAT paid by the business on its own purchases. From 2002, small businesses with an annual turnover of less than £150,000 have been allowed to pay VAT at a fixed percentage of their turnover. The fixed percentage that they paid depended on which industry they worked in. The rates vary between 4% and 14.5%. Traders using the scheme could also claim back input VAT, the tax that they paid on capital expenditure, for invoices valued at more than £2,000. In 2015, the then Chancellor George Osborne announced the plans to make tax digital, MTD. It is still not known how this will affect the flat rate scheme, but accountants feared that the flat rate scheme may be abolished through its implementation. One of the major problems traders had applying the flat rate scheme was choosing the correct industry category from which to apply the correct fixed percentage. This was made difficult as there are only 51 industry categories available for each trader to choose from, which is hardly an exhaustive list. HMRC were forcing traders to choose from that list of 51 categories rather than allowing them to pick the category business services not listed. Traders faced penalties and increased VAT liabilities if they did not use the correct rate. Unsurprisingly, this led to traders challenging the percentage rates that were being applied to their businesses. At the tax tribunal, two traders, SSL Subsea Engineering Limited and Idess Limited, successfully challenged HMRC's contention that they were civil engineers, percentage 14.5%, rather than mechanical engineers, business not listed category, at 12%. Despite these lost cases, HMRC refused to clarify the situation, so many traders were being left in limbo as to whether they were applying the correct rate or not. Finally, in March 2016, the VAT Notice 733 on the flat rate scheme was amended to reflect what tribunal judges had said in numerous tax tribunal cases. That is, ordinary English should be used in classifying these categories. One example mentioned by HMRC concerned the category management consultants, which has a fixed percentage of 14%. Before the amendment to the notice, HMRC insisted that marketing, health and safety and human resources consultants would be included in the management consultants category. Given that there is no specific category for marketing, health and safety and human resources consultants, they are now free to apply the business not listed elsewhere category, which has a fixed percentage of 12%. The director of JKK Engineering was a chartered engineer working on plant and equipment as a project manager. HMRC insisted that for the purposes of the flat rate scheme, the company should be placed in the civil engineers category with a flat rate percentage of 14.5%. When learning of the decisions in the Subsea and Idess cases, JKK Engineering applied to HMRC to amend the percentage to 12% for the businesses not listed elsewhere category. HMRC agreed to the amendment, but refused to retrospectively go back 4 years. The director of JKK Engineering took the matter to the tax tribunal. The tribunal supported JKK Engineering's position, allowing them to make a retrospective correction to its last 4 years' VAT returns. Following the result of this case, traders should now look carefully at whether they are using the correct category and make a claim for correction if they think that they have overpaid. The new Chancellor, Philip Hammond, has declared that traders are abusing the flat rate scheme. To counteract this, the Chancellor announced the formation of a new category called Low Cost Trader (LCT) with a flat rate percentage of 16.5%. This new category comes into force on the 1st of April 2017. An LCT is defined as a trader whose VAT inclusive costs for goods are lower than 2% of the VAT inclusive turnover in an accounting period, or greater than 2% of the VAT inclusive turnover, but less than £1,000 per annum if the prescribed accounting period is 1 year. If it is not 1 year, the figure is the relevant proportion of £1,000. Goods for the purposes of this measure must be used exclusively for the purpose of the business, but exclude the following items: capital expenditure on equipment, food and drink, and vehicles parts, and fuel. These exclusions are required to prevent traders buying either low-value everyday items or one-off purchases in order to inflate their costs beyond the 2%, and thus continue to pay VAT at a lower rate than 16.5%. Let's look at an example of this. John is an IT consultant, flat rate percentage of 14.5%. During his last accounting period, John's VAT inclusive turnover was £150,000, VAT £25,000, with VAT inclusive expenses of materials £600, VAT £100, accountancy fees of £1,200, VAT £200, telephone £300, VAT £50, and accommodation and subsistence of £6,000, VAT £1,000. Under normal rules, output VAT £25,000 less input VAT of £1,350, sum of 100 plus 200 plus 50 plus 1,000 equals £23,650. Under the flat rate scheme, £150,000 multiplied by 14.5% equals £21,750. Therefore, John has made a profit of £1,900 by applying the flat rate scheme. HMRC did not want traders to make such profits when they formulated the scheme back in 2002. After April 2017, John will be classified as a low-cost trader. His expenditure on goods is only £600 VAT inclusive, which is less than 2% of the VAT inclusive turnover of £150,000. His VAT liability would now be £150,000 multiplied by 16.5%, giving £24,750. John would now lose £1,100 if he continues to use the flat rate scheme. It is therefore vital that traders now contact their accountants to see if they should continue using the flat rate scheme, and indeed, should they still be registered for VAT itself. If you have any queries arising from this blog, or any other accounting queries, then please do contact us to discuss them further.